Hello traders, welcome back to this episode of Weekly Forecast. Today I decided to kind of do an update for what is actually happening on the dollar index. So as you see, I still have the levels that I showed during the forecast over the weekend on Sunday, and we've had a reaction off from this small little imbalance in here and price rejected. Based on that rejection, obviously you saw the euro giving a rejection off from this level here. The New Zealand hasn't given so much of a rejection. Aussie similar, not so much of a rejection, but it actually traded into the imbalance that I was looking at. Crude oil has given a move down, and I mentioned I was looking for a continuation to this side. Gold, I was looking at this small little imbalance to see what we're going to get, but potentially we will ultimately go for this equal high. Euro yen, this has been the pair that I traded today. If you listen to the forecast, I said I'll see how Monday trades, and then it will give me an idea of what to do. And today actually gave me a sell in the lower time frame. And then same thing with this one. I said I'll wait till Monday trades, and then I'll see what it's gonna give me. I wanted to sell a little bit up in premium, but our price didn't give me that, and then we've seen a rejection. So I'm looking for sell going into tomorrow. All right. Now, why am I doing this forecast update today? Because I've promised I was going to share something, and yeah, today happens to be the day. I am free and I'm happy, so I decided why not today, of course. What am I going to share with you? If you've actually listened to my mentor ICT for a long time, he has said something that it's all about the open, high, low, and close. If you know what they are trying to do, you kind of know what price is potentially gonna do, right? So if you think about the open, high, low, and close of every candle, then you have a high probability of knowing what price is going to do. But I have been doing this on the daily time frame because that's where the money is. So I spend most of my time on the daily time frame, and that's where I operate with the buyers, right? Now, what do I want to share with you for today? Let's go to the dollar index and let's talk about it. I want you to look at the okay, let me give you the title for what I'm going to talk about. We are going to look at the closing prices. Okay, the closing price of every single candle. I'm not talking about the open, the closing. Okay, so think about the closing price of every single candle you see. So I'm gonna start with last week. Why I anticipated lower prices. This was Friday. Okay, so look at the closing price on Thursday. Price was able to close below the closing price on on Friday here. That is a sign that price wants to do what? Go lower. Why? Because prior to that, the closing prices has been on the upside. Okay, prior to that, the closing prices has been on the upside. So this candle closing below Thursday's low was an indication price wants to go lower. The next day, which was Monday, price closed lower, so we're gonna remain bearish. Tuesday, price closed lower, we're gonna remain bearish. On Wednesday, price closed higher, but it couldn't close above the previous day's high, so we're gonna remain bearish. Because if you remember from here, for price to go lower, we had to close below Thursday's low. Here, price couldn't close above this candle's high. We actually closed right there. Hence, price is still bearish. The next day, price closes below this candle closing price. Here, that was Thursday. Friday, price closes below the closing price again. And that was Friday. So, sorry, that was Friday here, right? And then we had Monday. Now take note of this. Monday could not close above Friday's high. So we still what? Bearish. Today, we could not close below this candle's low. So what does that mean? It means that maybe we might be reversing. But what will be the reversal signal, right? The signal will be, how do we close tomorrow? Because if the closing price is above this candle's high, then as price changed direction over here, the same way we will start looking for price to trade up. So I want you to think about the closing price. Okay, so from here, as an example, we closed above this candle's high. Next day, price couldn't close above this candle's high, so it's an indecision day. The following day, price closes below this candle's low, so you're bearish. And this candle does not close above this high, neither the low, indecision. But because we closed below this candle's low, you're gonna remain bearish. Next day, price closes below this low, you remain bearish. We close below this low, you remain bearish. This candle does not close above this high, nor below that low. But because we closed below this low, you're going to remain bearish. So this might be a day that you might struggle. Next day, price closes above this high, you're bullish. Closes above that high, you're bullish. No close, but because we closed the previous candle, you're going to remain bullish. Another close here, you're bullish. Another close here, you're bullish. That day, you're going to take a loss, and then you're now bearish. Okay, so if you do this, it's going to help you not just with the buyers, but it can give you heads up on what price is trying to do. So always think about the closing price of these individual daily candles, and it can give you a whole lot of information. Okay, now let me take you to Euro Yen, and I'll show you why I said I wanted to see how Monday was going to trade. Let me use this right here. Okay, so this was Friday. Price closed above, you're bullish, you're still bullish, you're still bullish. Now we are bearish, big candle. So for us to be bullish again, price will have to come and close above this high on Friday, and price couldn't do that. It couldn't neither close below this candle's low. So because of the last close being down, we are still going to remain bearish until something else comes in. This candle fails to close above that high, so you still remain bearish. Same thing here, we still remain bearish. So what actually happened was we had 3 Indian drives run above this high, run above that high, and then rejection. Hence, we're going to look for price to go lower. Now, if we close below this low today, which is 16th of November, then we will anticipate price to continue going lower, right? Let me give you one last tip and then I'll bring this video to a conclusion. One of the things that I use when market opens is I'm looking at the closing price. Okay, this closing price, that closing price, wherever it closes, I'm looking at that particular closing price. All right, and I've not even shared this with my group, but they're gonna learn it from here. Okay, actually I have shared it, but I shared it on the higher time frame. So look at this closing price right here, and I'm gonna go on to the 1 hour chart. Okay, so the closing price of this candle, Thursday's candle, let's go to the 1 hour. This is my closing price on Thursday. I want you to see this candle here. What actually happened? If your closing price, if we do trade below the previous candle's low or the previous day's low, and price trades above and close above the closing price, that can be a sign of a reversal. I'm going to repeat that again. Actually, let me draw it over here. This will be your daily candle. It's a bearish daily candle. This is going to be your closing price. If I'm looking for a reversal for the day, or I'm staring at the chart the next day, I have this line on my chart. I have this line on my chart. This is the low. This is the close. If the next day trades below this low, what I'm looking for is for price to trade and close above the closing price here. This closing price. Once we trade through that and close above it, anything coming back down, I'll see it as a pullback and I'll anticipate price to go up. Okay, so sometimes it might not give you the run below the previous day's low, and this is where the closing price comes in handy. You want to see an aggressive run above the closing price, which essentially is displacement, right? You're looking for displacement above the closing price. If it does take out the previous day's low, that is fantastic because that is powerful. But if it doesn't, I'll still treat this closing price, the displacement above it, I'll still treat it as a potential not reversal, but a pullback. If we are bearish, if we are in a bearish trend, I'll see that as a potential pullback or the beginning of a potential pullback. Preferably, you want that displacement to happen in London, because if it happens in London, chances are whatever low that was placed in here will be the low of the day. To show you an example, let's actually go on to any random pair. Let's use Aussie. let's go to the daily time frame and then use yesterday. Okay, that's the closing price there, right? Now if we go to the 1 hour chart, you're looking at time of the day, right here, that candle. So if you go back, this will be Monday, this will be Tuesday. So we are looking at a 1 hour candle on Tuesday. That candle right there confirms to me that price is going to go up because we've gone above the previous day's closing price here. And like I said, preferably you want it to happen in London. It just missed it by 1 hour. And then for the rest of the day, I'm bullish. Let's go on to the daily chart and then find another pair. In this case, I'm going to use a bearish scenario. Okay, so this would be the closing price. So here I would expect a displacement on the 1 hour candle below this level, 88.96. So I'll go on to the 1 hour chart, and what I said, preferably in London. We had one. This is, let me go back and check the day. At least I forget the day. Okay, so that's Friday. So on Monday I'm expecting displacement below the closing price on the 1 hour chart. So Monday will be right here. So this happened at 5 a.m. Notice that candle right there. That to me confirms that price is gonna go lower. Okay, it happened again in New York, London session. So price is gonna go lower, pull back, down it went. Let's go on to the daily again. Let's look at just today. That closing price right there. Go to the 1 hour chart. That right there. This happened at New York, London close session. That's when price went above the closing price, and then you see what happened next. Price went up. I'm gonna do the last one, and then I'll leave you to go in and backtest. There's more to it, but this is enough. Let's go to the daily, and let's choose New Zealand dollar, and we can actually look anywhere on the charts. Okay, I'm gonna use here because that was the day I actually was expecting higher prices. This candle's closing price. I'm gonna go to the 1 hour chart, and you're gonna see. Before I do that, let's look at the day itself. So that was a Thursday on the 22nd. The 3rd of November. So Thursday, 3rd of November. So we'll be looking at Friday, 4th November. So this will be Thursday, and Friday. So Friday, we traded, there was a displacement above the closing price during Asian session, right here. Okay, that candle right there confirms that price was gonna go up. You have to do a lot of backtesting with this idea, and then eventually you start seeing what I'm trying to communicate here. It's not 100%, but probability wise is high, and that's what traders do. We trade the probability. Okay, we don't trade absolute, we trade probability. So because the probability is high, every single one of them that I've shown you did what I'm trying to communicate to you. If you do it with the trend, It's very powerful. If you do it against the trend, sometimes you get away with it. For example, somewhere here, if you look at the closing price, yeah, that was Tuesday 8th of November. Okay, we're gonna look at Wednesday 9th of November on a 1 hour chart. So Tuesday was here, and then this was Wednesday. So Wednesday we aggressively went below it here, displacement here, and then you saw what happened going forward, right? So this is a counter trend. However, it did pretty well. If we go back to the daily, after that day, that's what we did. You can do the same thing over here, right there. Drop down, so that will be Wednesday 9th. So we're looking at Thursday. Okay, so I had a flash I had a flash crash on my screen. So that would be Wednesday, and this was Thursday. That candle was very bullish. It went aggressive above it in New York session, and then you can see what happened next. Okay, I apologize for the black screen. I don't know, my computer is playing up with me, so I have to restart it. So hopefully you did find something insightful on this. Practice it going forward, and then you can use it in your analysis to help you look for potential reversals, continuations, and so on. So I'll talk to you again. Stay safe, and I will see you guys on Sunday for another forecast. Peace.